For pretty much our entire lives, there's been one currency that rules them all, the US dollar. It's been the bedrock of global finance. But, the ground beneath our feet is starting to shift. Today, we're going to dig into the signs that the dollar's long reign might just be heading into its twilight years.
So right off the bat, here's the billion-dollar question, or maybe I should say trillion-dollar question. After 80 years as the world's undisputed financial heavyweight champion, is the US dollar's era finally coming to a close? And look, this isn't just some academic debate anymore. It's a real conversation that's shaping huge decisions, everywhere from Wall Street to Beijing.
To really get a grip on what's happening now, we've got to rewind the clock a bit. How on earth did one single currency become the operating system for the entire global economy? Let me tell you, it didn't happen by accident. It was absolutely by design.
Okay, so the story really kicks off way back in 1944. It's the end of World War II, and the world's leaders get together for what's called the Bretton Woods Agreement. Basically, they pegged all their currencies to the US dollar, which itself was backed by a solid promise of gold. Now, fast forward to 1971, and the US cuts that link to gold. But here's the crazy part. The system just stuck. The dollar had become the world's go-to, the trusted, stable standard for doing business.
So you hear this term reserve currency thrown around a lot. What does it actually mean? Well, think of it like this. It's the default language for global money. It's the language everyone agrees to speak when they're trading. So when, say, Brazil wants to buy oil from Saudi Arabia, that deal is almost always priced and paid for in US dollars. It just creates this simple, universal standard for the whole world.
But that foundation, which seemed so unshakable for so long, is now showing some really serious cracks. And the pressure isn't just coming from one direction. It's building from both inside the US and from a whole world of countries looking on.
One of the biggest pressures is coming from inside the house, a U.S. national debt that has ballooned to over $34 trillion. Now, if you're another country and you're holding massive amounts of your savings in dollars, a number that big, well, it makes you nervous. It raises some serious questions about the long-term stability and the real value of those savings. It's a risk that's just getting too big for a lot of folks to ignore.
And then you've got the pressure from the outside, what some people are calling the weaponization of finance. See, when the U.S. uses economic sanctions, it can literally freeze a country's access to all its dollar reserves. It can lock them out of the global economy with a flip of a switch. Now, that's an incredibly powerful political tool for sure, but for the rest of the world, it's been a massive wake-up call about the huge risks of being so reliant on a single currency that someone else controls.
So this sense of vulnerability has sparked this really powerful motivation around the world. It's time to build something new. We're now seeing this growing club of nations, and we're talking major economies here, actively creating their own financial pathways that bypass the US dollar completely. And believe me, this isn't just talk. Countries are literally voting with their wallets. Central banks, especially in places like China and India, are buying up gold at a pace we haven't seen in decades. Why? Because they see gold as a neutral, safe haven asset. It's something real that no single country can just print more of, or control, or sanction. And you can see it happening in major trade deals right now. Saudi Arabia, the king of oil, is openly talking about selling its oil to China and getting paid in Chinese yuan. Brazil and China have already set up a deal to trade directly in their own currencies. The BRICS nations are even floating the idea of creating a brand new shared currency. I mean, these are real, tangible steps away from the dollar system.
So what we're witnessing, really, is this fundamental change in the whole structure of global finance. For decades, we've had this centralized system built around the US and the SWIFT network that handles most international payments. Now, we're moving towards a much more multipolar world with different competing systems, like China's brand new Digital Yuan.
Okay, so this is all really fascinating stuff on a global scale, but let's bring it right back home. Why does any of this matter? Why does a potential shift away from the dollar matter for businesses, for your investments, and for the money in your own wallet?
Well, even if the dollar's dominance just declines gradually, it would still send major ripples across the entire economy. It could change the price you pay for anything that's imported, it could have a huge impact on the cost of oil and gas, and yeah, it could potentially drive up inflation as the world recalibrates to a whole new financial order. And if you're an investor, this creates a really complex picture. The risks are pretty clear. You're looking at more volatility in the markets, maybe some pressure on US-based assets. But it also cracks open the door to some incredible opportunities. We could see major growth in emerging market currencies, new strength in commodities like gold, and a huge rush of investment into assets that are outside of the US.
So what's the general consensus from the experts looking at all this? Well, nobody thinks the dollar is going to just vanish overnight. But the era of its absolute dominance, that's likely coming to an end. It's paving the way for a much more fragmented world, where multiple major currencies and financial systems all compete and coexist side by side.
So we'll leave you with this final thought to chew on. For nearly a century, the entire world built its economic house on the foundation of the US dollar. Now, for the first time in generations, we are watching the world begin to build something new. The really big question is, what's it going to look like?